This is David Russell, Global Head of Market Strategy for TradeStation. And today we'll look at major events for investors and traders. Stocks are trying to bounce as investors weigh potential positives against rising global risks. The S&P 500 rose 0.4% between Friday, October 6th and Friday, October 13th. It was the index's second straight positive week as the fourth quarter gets underway. 10-year Treasury note yields also dropped for the first time in 6 weeks. Stocks climbed amid signs the Federal Reserve has done hiking rates. Philadelphia Fed President Patrick Harker and Board Governor Christopher Waller suggested September's rapid increase in Treasury yields may reduce the need for further tightening. Crude oil inventories unexpectedly rose the most in 8 months, which could help stem inflation. The first batch of bank earnings were also better than feared. But escalating violence in the Middle East threatened to undermine those positives. Investors are worried about a potential Israeli ground attack on Gaza or disrupted oil supplies. They're also nervously watching the deadlock in the House of Representatives, which can't do business until it chooses a new speaker. Last week's economic news had little impact on the market. Inflation was slightly higher than expected, mostly because of oil prices. Energy producers and gold miners jumped last week because of the crisis in the Middle East. Military suppliers, including Northrop Grumman and Lockheed Martin, also surged. The other top-performing sectors were utilities and real estate investment trusts, which had fallen recently because of higher interest rates. Wells Fargo led banks higher after results beat estimates. Its provisions for bad loans were also smaller than feared. JP Morgan Chase and Citi had similar results. Health insurers gained after United Health beat consensus and raised its full-year forecast. DaVita fell the most in the S&P 500 last week after Novo Nordisk announced positive data for its diabetes drug. Companies associated with dialysis and diabetes care like Baxter and Dexcom have declined sharply in the last month on signs that weight loss drugs will reduce demand for their services. Now let's chart the market. Some investors may see bearish risks emerging for the S&P 500. First, it stalled last week at the price gap, immediately after the September 20th Fed meeting. Technical analysts could watch for this level to become resistance. Second, the index has made lower highs since July. That potentially increases the importance of the recent support above the 200-day moving average. A break of that level could produce a lower low and confirm a downtrend. Third, Friday's close is near the 43.25 level, where the index peaked in August 2022 and bounced this summer. Failure to hold this price zone could invalidate June's breakout after Congress raised the debt ceiling. Still, bigger issues are impacting sentiment. Further drops in inflation and interest rates would likely support stocks, but increased geopolitical tensions could have the opposite effect. Now let's consider the coming week. It brings the first big chunk of earnings season, with results due from about 1/10 of the S&P 500. There are also major housing numbers. News from the Middle East could have an oversized impact as well. A large Israeli incursion into Gaza might be viewed bearishly, while de-escalation might relieve fears. Tuesday brings retail sales and the Homebuilder Sentiment Index. Representative Jim Jordan could face a vote for Speaker of the House. Bank of America, Goldman Sachs, and United Airlines are some of the major companies announcing results. Housing starts and building permits are due on Wednesday, along with crude oil inventories. Tesla, Netflix, and Morgan Stanley report earnings. Initial jobless claims and existing home sales are on Thursday. American Airlines and Freeport-McMoRan issue quarterly results. On Friday, American Express and Schlumberger issue numbers. Thanks for watching. Please visit TradeStation.com for more.